Hello everyone, in this video we are going to find out why are the oil prices falling. There are three benchmark oil, WTI, Brent and Dubai, which are used to track the prices of oil. Out of these, Brent is the most important. This is oil which is drilled from the North Sea and this is used to actually follow the prices of oil. So where exactly is the Brent headed? From $115 per barrel in June 2014, Brent today is at $52, which is a fall of more than 50%. If we see the graph of the Brent prices over the years, we can see that in 2005, it is the first time that the Brent prices moved above 50 on a sustainable level. They reached a record high of 140 in 2008, and then there was a sudden drop because of the financial crisis. After that, there has been a recovery because of the global economic recovery and also the geopolitical problems like the civil war in Libya, which is this region. So before we analyze the oil prices, we need to understand who are the stakeholders in the whole game. On the supply side, we have predominantly OPEC, USA, and also Russia, Islamic State and Iran are players. On the demand side, of course, we have all the developing and the developed countries. So all these people are going to be affected this way or that when the oil prices move. Now, like any other commodity, the prices of oil are determined by a balance in the demand and supply. So if the demand is higher than the supply, the prices go up because there are more people demanding that quantity than there are people willing to supply. And on the other hand, if the supply is higher, the prices fall. So in the case of oil, what we can see is that of late the demand has been rather low because of the global recession, and also people already are holding on inventories. So they do not actually want to buy more oil because they are already holding on to some. So the demand has been low. At the same time, the supply has been relatively high. Why is that? Firstly, because of the high oil prices initially, there was a lot of money which went into research in alternative sources. So now a lot of alternative sources have been developed. Also USA went whole hog into shale production, so which also increased the oil supply in the economy, in the whole global economy. Another thing is that OPEC has not cut its supplies. OPEC supplies have been constant across the years, even with global oil price fall. Now all these three, at least the supply side factors, need a little more examination. So let's start with shale. In case of shale, if you can see this graph, since 2008, US has added 4 million new barrels of crude oil per day. That is shale. So if you can see it was around 5 barrels per day, 5 million barrels per day in 2008, and today it is at 9 million barrels per day. So they've added, which means the global crude production of 75 million has been getting affected. Now, what the thing about shale is that after a lot of research, people have come to the conclusion that shale is profitable or economical only when the break-even price, that is the break-even price of shale, is between $50 and $70. Which means that if the price of oil falls below 50, that is obviously because shale is a substitute of normal oil, so if the oil prices fall below 50, shale will also be fetching roughly the same amount, and then shale becomes uneconomical. So the people will not be willing to supply shale oil if the price falls below 50. That is the break-even price. So if the prices continue to be falling, shale production will get hit and people will not be willing to supply shale oil. The second factor we talked about was that OPEC has kept its supplies constant. So why could that be? OPEC is actually a cartel. So they control the supplies so that they can control the price. And with falling prices, one would expect them to actually cut supplies so that the price would be retained at a higher level. But they have not done so. What is their reasoning behind it? What is it that they say? First of all, they say that the oil price fall is because of speculators. So speculators are driving the prices and it is not real economics of demand and supply. And because they feel that this is a temporary phenomenon, the speculators will eventually go away, they are not willing to cut the supplies right now. They also feel, or at least they say, that the demand is not that low and the demand will pick up at a later stage, so there is no point in right now cutting the supplies. Also, they feel that, like I mentioned earlier also, that the inventories of oil have built up. So even if they cut the supplies, because people are already holding oil, the oil prices will not move that much. That is the reasoning that they are saying. But now let's sort of go behind the curtains a little bit. First of all, let us see what happens if OPEC keeps the supplies constant. As we discussed, the price will fall further because the supplies are at a higher level than demand, so the price will fall. If that happens, again as we discussed, the shale producers will be driven out because shale becomes uneconomical below the level of $50. Also, what happens is, because the oil price is low, the oil is so cheap that alternative sources become unviable. So enough R&D will not go into alternative sources of energy. So both shale and alternative sources will go out of business, which means eventually in the long run it will mean more profits for the OPEC. So the monopoly profits will remain. So this whole idea is driven by the fact that OPEC is not thinking short term of earning more profits, but thinking long term of how to maintain its monopoly power. And another behind the scene thing is that Saudi Arabia and Iran are major rivals in the region, and Saudi Arabia is actually defending its market share by cutting prices. It wants to drive Iran out of business because Iran's economy is not in a position to sustain at oil at such low levels. So Saudi Arabia is directly hitting at Iran by trying to cut the oil prices. So like we said, there's many countries which are very hugely dependent on oil. What happens to them if oil prices move so low? Let's start with Russia. Russia is hugely dependent on oil and gas production, with oil revenues making up 45% of its budget. If oil stayed at $60, its GDP will shrink 4.5% in 2015, which is a huge blow to Russia. Now, US actually might be interested in doing this, and that could be a reason for its covert support to actually let the oil prices fall. Secondly, Iran. Iran's economy is recently rebounding, but it needs the oil prices to be above $100 to balance its budget. Again, its rival Saudi Arabia would be interested in hurting Iran's interest by not letting this happen. Another economy which will be hugely disadvantaged would be Venezuela, which could default because it has high inflation, and the economy would shrink 3% if the oil prices remain low. So because of all these dynamics, oil has always been not an economic commodity only, it has been a geopolitical source of power and influence in the world. They say that whoever controls the oil actually is the real superpower in the world. So these are the factors which are moving oil prices in this or that direction. Now it remains to be seen which economies' influence on oil will bear fruit and where will the oil prices head in the future. Thank you for watching. Your comments and suggestions are welcome. Please subscribe to our channel. Thank you.